Hello, I'm Steve Skancke, Chief Economic Advisor at Keel, and I'm pleased to share our thoughts about the impact of the U.S. conflict with Iran on the U.S. economy and financial markets. Global equity markets have remained remarkably resilient in the face of continuing uncertainty about the terms and timing of a resolution to the U.S. Iran conflict and the reopening of the Strait of Hormuz. If the latest peace settlement proposals succeed, based on reactions to similar prior announcements, we would expect to see a drop in energy costs and a rally in bond, stock, and gold prices. Within the U.S., the resurgence of tech stocks and the outperformance of the U.S. stock markets over the past month or so has been remarkable. AI is still propelling tech sectors, accounting for more than two-thirds of S&P 500 earnings and capital spending. Over the past 2 months, these AI-related companies have also outperformed whenever hopes of peace have emerged. Economic growth rebounded in the first quarter of 2026, and March personal income and spending both increased. New non-farm jobs increased in April for a second month in a row, and productivity increased better than expected, which helps contain labor costs as real wages are rising. On the inflation front, personal consumption expenditures inflation measure is up 3.2% through March, and the April headline CPI to be reported on Tuesday, May 12th, is expected to rise to 3.6%, which would be its highest level since September 2023. Even with a 2+% increase in first quarter economic growth, April consumer sentiment fell below its prior record low from June 2022, based in part on a substantial increase in concerns over higher prices and weaker asset values. Suggesting that inflation has been defeated by comparing its lower rate of growth to when it was over 9% in 2021 misses the point with consumers and investors who are reeling from prices that feel unusually high, and not from the current rate of change in prices. This is an important distinction as we're heading into midterm U.S. elections. We remain hopeful that the conflict with Iran will end soon on terms acceptable to all parties that will allow for free and safe transit through the Strait of Hormuz. Until that happens, financial markets will remain volatile. In the meantime, a well-constructed, diversified investment portfolio should continue to perform well as we move through this conflict and come out with a result that represents a return to stability. If any investor has questions about their own portfolios, our Keel team would be happy to address them. If you would like additional information, please contact your advisor or any member of our Keel team.